The following interview segment was taken from Talking Wealth on flix.net. That's FLIXX.net. Talking Wealth is brought to you by Wealth Within and presented by Dale Gillham and Janine Cox. To watch a full episode, go to flix.net and click on Talking Wealth under the business and finance sections. Or for more information, visit wealthwithin.com.au. Today I actually wanted to welcome to the show a friend of mine and someone I've actually known for years who I am sure will add lots of value, not only today, but into the future for all of you who are watching this channel, our Talking Wealth channel on Flix. Now, his name is Chris Collingwood, and a little bit about Chris is that he is a leader in training in neuro-linguistic programming, or NLP as it's known now. He is and consults to companies. He specialises in cultural, corporate and personal change. He has over 20 years experience in coaching, consulting, leading seminars in Australia, Indonesia, India, New Zealand and the US. And Chris holds a diploma in trading and assessment systems, a degree in psychology, a graduate certificate in neuro-linguistic program and a master's degree in applied science, social ecology. And importantly, Chris specialises in one-on-one work with people, course design, accreditation and training of corporate consultants and executive coaches. So a big long title, but I also wanted to add that Chris is a trader of the stock market and other markets and works with traders to achieve peak performance. Chris Collingwood, welcome to Talking Wealth. How are you today?
Look, very good, Dale, and it's great to be here.
Yeah, I've been looking forward to having you on. Now, there's a couple of firsts we've got today because this is your very, very first time on the show. So welcome to Talking Wealth for the first time. And secondly, you're the first Aussie I've ever interviewed on the show. So there you go. There's two firsts for you.
Fabulous. I mean, it's nice to be breaking new ground.
Well, you're the crash test dummy. Normally I'm interviewing people in the United States and normally that's early in the morning and I get stuck with all of that. So to me, this is great. I can do this in the afternoon and have after lunch rather than being bleary-eyed before my second cup of coffee. So I've been looking forward to this. Just to let people know a little bit more, as I mentioned, you are a trader yourself, so you do trade the markets yourself. You've been trading the markets for decades yourself, is another one. But also you work with traders, and I know you've had lots of traders come to you to help get them, for them to get your help in how to trade better, and not necessarily in a technical nature and skills in terms of analysing charts and those sorts of things. It's more about how they manage themselves and manage their psychology. But today I really wanted to get into, or the main thing I wanted to get into is what are the common issues you find traders have, or the common faults and traits that traders have that aren't successful?
Okay, so really the keys in my view to trading is you want to have a good trading model that's been appropriately tested, which includes, of course, things like risk management and money management. These are sort of things that you teach. And the other side is the trading psychology. I mean, you see traders who have got an excellent trading model, it's been tested, it's reliable, if only they stuck to the model. Well, what goes wrong? They get emotionally involved. So emotions are part. They get their emotions get involved. They may have beliefs that drive some of the problem emotions that they have. They may lack discipline in terms of sticking with their trading model or their trading plan. And often they may know on paper about risk management. However, they don't understand the psychology in terms of their actual relationship to risk. And so they actually haven't looked at that part of it. And it's all nice on paper and so on. But when, for example, they start to put money into the market, the size of their trades go up. And there's a perceptual thing, and that changes their state. And they may have been trading very well before that happens, and then they start making mistakes that get emotionally involved in appropriate ways with the trading.
Yeah, I noticed. I think I remember you saying. I mean, you and me. I think the first time we chatted was over 20 years ago when I was living in Sydney, which was in the late 90s. We talk about that quickly. But I know we've been...
long time ago.
I know it's a long time ago. And I know we've been friends for a long time. We've trained together. You've been, worked with our students numerous times. But I think I remember you saying to me one day that when you're looking at athletes and people that perform at a peak state, like elite athletes. So for somebody in the US, it'll be like an NFL player, an NBL player. In Australia, it's somebody like an Australian football player or something. And they don't get less fit between one week or another. They don't have less skills from one week to another because they're highly skilled and highly trained.
Yeah.
What changes is here. And their performance one week to the next is changed because they change in some manner. And it's more of a psychology thing. And I think that's what you're saying about with traders too.
That's right. I'll use an example of golf. I think a good example. Somebody who plays really well, however, when they go into competition, there's a change it's a perceived change in their experience, and they start having what the golfers call the yips. So that's what they call it. And even though they're a very proficient, a very good golfer, but there's a change in the context. There's a change in their perception, and there's a change in their state. That's a good analogy for traders who can trade well with a model when they're doing paper trading. However, once they put real money into the market, there's a shift in their state, and they start trading poorly. The other thing about these elite athletes, of course, they look as a result of disciplined practice. They put the work in, and I think it's the same with trading. A person has a trading model, and they're disciplined. A good trader is disciplined in trading their model. A lot of poor traders will be focusing on the individual trade, and they have an emotional reaction or emotional response to whether the trade is going well or not. Top traders have a positive emotional feedback to following their trading rules. So it's about the trading rules, not so much for over focusing on the individual trades. And it's very interesting because it's, there's money involved. People focus on the individual trades, and if it's not going the way that they intended or hoped for, then they get a state change. The type of states, for example, hesitation. So somebody's got a great trading model, they've got the great setup, everything fits, and they can't pull the trigger. They can't actually place the trade. What's going on? Well, often when you do some coaching, those people, they've had 3 or 4 trades which fit with their trading rules, but they've had 3 or 4 losing trades in a row. So then they hesitate on the next trade, rather than sticking to their trading model. The other side of that hesitation is greed. They have 3 or 4 trades that go very well, and then their state changes, and they can do no wrong, and the trading rules go out the window, and they start taking trades they should never have taken.
Yeah, that's the overconfidence one, isn't it?
That's the overconfidence one. It kind of fits with exuberance, so they get very exuberant. I worked with one trader, and I knew when he was trading well because he would phone me up, and he'd been in this exuberant state, slightly high. Hey, I checked, he wasn't taking drugs or anything. It was all natural, And then I wouldn't hear from him for a couple of weeks. So I called him up to see how he's going. And of course, he was depressed because he had regret because he had made a number of trades outside of his trading model and lost money. So it's interesting. I think the trading psychology is under-recognized by most traders. If something's not working so well, they think, oh, maybe it's the model. And they go back and look at their model rather than looking at themselves.
Yeah, I find that, with mentoring traders, it is really, really interesting, that psychology that they actually go through. And I mean, obviously, you've mentioned a couple of those, like overconfidence. And I think nowadays we've seen that a lot after the COVID meltdown, we saw record numbers of retail people coming into the market for the first time, and some of them trading because they weren't working, they're at home, or they might have only been working part-time, and they're opening up all these broking accounts. We've seen brokers opening up record numbers of new accounts, and these people, a lot of them actually made money coming out of that March low because they just jumped in and they were lucky. But now the market's not as bullish as what it was back through that March, for that little 11, 12 weeks. It's going a bit more sideways, and so that overconfidence, and we're seeing that also in the Bitcoin market at the moment over the last sort of 12 months-ish, where you're getting people that think they're bulletproof and that Bitcoin's going to go up forever.
Yeah.
And so both of us see this all of the time, but I also see people, like you mentioned, they got that apprehension, like, oh, here's the trade, but I don't want to pull the trigger, maybe because I've lost a couple of trades in a row, so I'm not really sure. But another one I see is people that like external validation. So, and I do get, part of our course, our course in training traders, our accredited course, in the last 2 modules of that course, we provide trading support, which means the traders can send us all their analysis, their trades, exactly what they're doing before they do it, so we can check on it. And it's interesting looking at the psychology of the people. Some of them are confident, some are overconfident, but some just want external validation, and they want you to tell them it's a good trade rather than them working it out themselves. And it's quite interesting to seeing how people go through that whole psychology, because as you said, you're putting money on the line, and when you put money on the line, it changes how people feel or how they think about a certain situation. And what we teach traders is to do is be dispassionate when you're trading. Have a set of rules that you know, that are tested, that you know work, and stick to the rules, which is exactly what you said in slightly different words, but you just said stick to your rules. The best traders just do that, regardless of what's going on.
That's right. I worked with a fantastic trader, and you know who he is. Who's been trading for decades, very successful trader. He's cool as a cucumber when he's trading. He's dispassionate. It's simply a set of procedures he goes through. He has his particular trading model. He gathers his information, checks it all, makes sure it fits with his trading rules, and then he trades. There's no emotion involved in it at all. And I contrast it with somebody I know who, in terms of, you mentioned seeking external validation. This particular trader I worked with wants to be a super trader, wants to be in the 1% or the 0.01%. And he's driven by that because of the kudos that he wants to get from the rest of the world. So that skews his trading, and it sets him up for the highs and lows, for having highs and lows as he's trading, emotional highs and lows.
Yeah.
And well, in life in general, when people are searching for external validation rather than like having internal validation, feeling good about themselves as a person, it can set people up for failure in life.
Yeah, you're right. We all have doubts about our own ability and how good looking we are and all those sorts of things. We all have those sort of doubts and thoughts, but I find the best traders very much are in control of their emotions, and they also have, as I said a minute ago, a well-documented and tested plan, so that they know that it's not going to work 100% of the time, but that if this happens, I do this. If that happens, I do this. And by having that structure around themselves, it doesn't matter what the market's actually doing, whereas somebody who you've just mentioned, they're going to be a roller coaster all of the time. Because they're actually bringing the failure onto themselves, because they're not actually concentrating on what they should be. They're concentrating on something else. And that's really, to me, it's, if we replace the word trader with investor, property investor, or anything else into anything to do with money on the marketplace and investing, everything we're saying is still true. Regardless of what you're doing, whether you're a trader, whether you're an investor in the stock market, whether you're an active investor in the stock market, whether you're a property investor, or whether you get into mutual funds or whatever else. As soon as you start putting money into anything, these emotions can come up. And probably one of the questions I'd ask you is really where does this come from in people? I mean, obviously you said it just a little bit a while ago that trading psychology is really critical to people's success, or it's very important for them to really understand that and manage that properly. But where is it coming from?
Really, where our emotions developed, evolved. We're a hunter-gatherer species. That's where we came from. In fact, we're hunter-gatherers for a good 100,000 years. So all pre-agriculture, pre-industrialization. So we evolved, our niche is the African savanna, and emotionally, we need to have these heuristics or these rules of thumb so that something happens in the environment, and we need to have a program where we either, fight, flight, we run for it, or freeze. And so we're out there on the savanna and we're hunting, and we see some movement in the long grasses for our peripheral vision. We turn, we focus in, and we go, oh my goodness, it's a leopard. Now, at that point, that's where our fight, flight, freeze response kicks in because it needs to. We need to take action immediately. However, in contrast, if we stood there and did an analysis of the pros and cons of staying or fleeing, we'll probably be somebody's dinner.
Yeah, mincemeat.
Mincemeat. And unfortunately, we still have, well, it's not necessarily unfortunately, but we have these hardwired responses built into our brains. And yet we're living in a modern industrial society, and we're trading, let's say, real-time trading on the internet, via the internet. So we don't want to be just something happens and then panic or, okay, I've got to do something right away, or freeze. This is the benefit of having a trading plan. With a trading plan, you've already prepared and rehearsed what you're going to do under different circumstances. So you get a signal to get out, you get out. You get a signal to go and take a trade, you take a trade.
Perfect.
As simple as that. And by the way, that's another pattern. Some people treat it like gambling. And once again, they've got the highs and lows of that. And it's an activity where one needs to have a cool demeanor and take one's time. Have your system, follow the rules, and execute based on the rules, not what's happening in the moment. I see people who, rather than set everything up, they've got stop losses, etc. They set the trade. They can walk away. Well, I see other people that will sit and just watch. We worked with my partner and I. We worked with a gentleman at a bank. So we did some coaching of some traders at banks, and one of these traders, he would get incredibly exuberant about putting on a trade. This is going to be, he called it the mother of all trades. This is on while the Gulf War was on, and also known as a Rio trade. It's a trade you make, the one trade that sets you up for life and you can retire to Rio.
Yep.
And he'd put the money on, and he would literally say, he would shout out in an exuberant voice, "Go, baby, go." I mean, I was astounded. I was absolutely astounded. And he was employed by a financial institution to trade.
Wow.
Now, the only reason they kept him was the year before he had actually been lucky and made some good money for the bank. The problem was, in the last 6 months, he had been losing a lot of money for the bank. So that's why they brought us in to coach the guy.
Yeah.
That's not, just not useful. It's
No, it's not a useful psychology, is it, or a useful way of trading the markets? And we see a lot with people. It's an all or nothing approach. You know, they go in, they bet big and hopefully to win big. But what they don't realise is when you do that, you're also going to lose big as well. And more often than not, the losses are bigger than the wins because they hang on because they're fearing. They don't like being wrong, and that's what I find is we find traders, they take a position and when it doesn't go their way, they go, but I was right, but they don't know where to cut because they have that fear of being wrong, they have a fear of losing money, so that can compounds it all. So we just see them spiral and then they have these big losses and, you know, I'm not sure whether I've shared with our viewers on this show before, but I've actually met traders that have made $1 million in a year and lost it in weeks. From that mentality.
Well, actually, it's the same gentleman at this particular bank. One of the problems was, part of the problem was, when a trade wasn't going well, he wouldn't exit. So he described his name for the state that he went into. He called it the stunned mullet state, which I thought was a great analogy. He'd be in the state and he would have he was very focused, so all his peripheral vision would go. He'd become fairly tense. It'd be tunnel visioned. He'd be looking at a real-time system on the screen, and he was running this inner talk, this inner dialogue. He was doing calculations of how much money he was losing. He was watching himself losing money, and he would do this running calculation, and be stuck there, in that state.
He'd be paralysed,
He was paralysed by it. Now that paralysis, of course, goes back to about biological wiring in terms of fight flight. In this case, it's fight, flight, or freeze. Sometimes. In a dangerous situation, let's say out in the savannah again, we will freeze. But you don't want to be freezing. You don't want that hardwired biological response happening when you're trading.
No, definitely not. And it gets down to, the old adage of trading is cut losses short, let profits run. So he was doing the opposite, and that's pretty much what I would guess he'd be doing. And by being emotional about that and just getting in that myopic state, he's not able to do it. So just before we wrap up, now there's obviously, we do have a lot of people watching our show, and we talked about what people do that is not good for them in terms of trading and investment. What are the couple of things that somebody, if they're watching today and they want to be successful in the stock market, what do you suggest they do?
Okay. For any type of trading, I always suggest to people, when you're first trading and you've developed or have learned a particular trading system or a trading model, is to paper trading first and to do it in a disciplined way, to start building in the discipline, the right habits from the start.
Cool.
And then when you actually got money in the market, you want to maintain being disciplined about following your trading model. If your model says to exit, even though you think the trade that the particular trade could do better, if your model says that this is the exit point, you exit.
Yep, totally agree.
And the other piece, I think, as a general rule, the way I think about trading for me is for the long run. It's you're accumulating wealth over time. It's when people get into the short term is when they start making a lot of those mistakes. So I think extend the time frame. Know that, of course, as you would have learnt this during your training in trading, that there's a percentage of losses that are in your model. So you make a loss. So what? As long as you followed your trading rules, that's the important thing.
Well, Chris Collingwood, you've been great. Thank you for your chat today. But before we go, can you tell people where to find out about you?
Yes. A couple of places. In terms of personal profile, LinkedIn is pretty good. I think I'm the only Chris Collingwood. I'm one of the few Chris Collingwoods in Australia. There's about 5 of us, I understand.
Well, you're unique.
Unique. And and you'll see a picture of me, a mugshot of me on the profile, so you'll recognise me.
Yep.
The other place is my main website. I've got a couple, but my simple one to remember is NLP. So N for neuro, L for linguistic, P for programming, nlp.edu, edu for education, .au for Australia.
Fantastic.
And you can find me there. But I'm always happy to chat to people. I'm pretty responsive to messaging on LinkedIn. I'm fairly active there. And I'm very active. If somebody sends me an email, I'll get right back to them. So.
Cool. All right. So if you want to catch up with Chris, go to nlp.edu.au or jump on his LinkedIn profile. Chris Collingwood, thank you for your time today. I look forward to our next chat where we get into some more nitty-gritty. So thank you again for time today.
So thank you. It's been a pleasure.
For more information on our guest in today's episode, visit the link on screen right now. For more Talking Wealth, visit flix.net and click on Talking Wealth under the Business and Finance section. That's flixx.net. Or visit wealthwithin.com.au, where we have hundreds of informational videos, live shows and Talking Wealth podcasts. Talking Wealth was voted number 3 in stock market podcasts globally in 2018 by FeedSpot. For more information on our courses, visit wealthwithin.com.au.